For instance, with position accounts, I have accounts that when you find a setup, the setup is the setup. Like you can't say, oh, I'm only going to take positions or setups that I find on the 4 hour, or I'm only going to take them that I find on the daily. You can't really say that, because if you get a setup on the daily, it affects every time frame underneath it. And that's how it tends to work. So if the daily is bullish, you'll have some major pullbacks in the lower time frames, of course, because they're the lower time frames. Because the daily, like, you can pick up tons of pips if you catch a setup on the daily. But on the daily, because you do have those big dips, you might do a currency pair, and you might do it at 0.01, for instance. But you get a setup on the 1 hour, and you might do it at a 0.05, because the setup will, especially once we get to use the trade manager again, the setup will coincide with that time frame. And so, you could be on the daily, you can be bullish, and then on the 1 hour you could be bearish. So you'll have multiple trades on the lower time frames, where you'll just be in one trade, maybe on the higher time frames, like the daily or the 4 hour. And so I really want you guys to learn position, how I position trade. I know you guys already do, but my version of position trading, because it's really a leave it and forget it. And so then that way, you always know. Like, for instance, at one point I had something running on the daily. It was a daily pack. It was a daily double top that I had found, and I caught it. And as you guys know, it was around the time when we just had this, all of the indices were dropping, right? So, and it went into, of course, eventually being a retracement. Well, just imagine catching that double top on the daily, and it retraced. I think the daily retraced almost to it was past the 61.8. So you can imagine, I think it was like 10,000 pips. So just imagine catching that. And of course I caught it, but I caught it right after it closed beyond the 23 points and validated the retracement. But I caught that setup on the daily. I caught the double top on the daily. So it was going for like a month, and I had a 0.01 position in it, and it ended up making like $10,000, and I never had to watch it. I never had to watch it. So it's those type of setups, and you don't have to watch those setups. And so, that's a 0.01. That's a very small lot size, you guys. That's like you're getting pennies. Think about it. Like, so imagine if I caught that on the daily, and then I had a couple of setups, maybe a setup on the 4 hour, and then a couple of setups on the 1 hour, and I caught the waves on those lower time frames. So that's how I want you guys to think about it. Like, the daily is the big boy. Like, you're going to get the big reversals. You're going to, once that validates that the retracement validates on that daily, like, that it's going to retrace. Like, so you always know that, until it get to the 38, or until it gets to the 50-61-8, or, the 786, that if it's a retracing and it was buying, it's going to be selling. That's going to be the primary trend. So just imagine really trading, knowing, with that knowledge of that being the primary trend for every time frame below it. Because that's how you have to think. Like, what is the primary trend? Like, I know that it is in a retracement. And so if you have that, and I actually have a tool that allows me to keep that on my chart, or to pull it up on my chart, where I can say, okay, what is the trend on this time frame? What is the trend on this time frame? Again, because I told you guys, I don't like to keep writing stuff. I don't like to keep drawing boxes. So I created an indicator that does it for me. Like, literally. And I'm gonna share my screen really quickly, because I forgot I wasn't sharing my screen. So yeah. And so I literally, I don't even remember the name of it, but let me see if I can find it. But I literally created a indicator where I just put, it tells me what market structure is. So again, I'll find it and tell you guys. I don't even know what it's called. But yeah, so there's things like that that you want to know, like you want to be able to know, like what's what, so that you don't have to deal with knowing that, and you just have it on your chart. Like, I know this is what's going on. This is and then you trade with that. Yeah, I have to find it later because I don't even know what it's called. But yeah, I do. So those are all ones I made. So yeah, but I just wanted to get that out and show you guys. And really the thing is the tool is created to help you guys a lot with having those signals or having that information. I'm gonna go to something else so we don't have to look at this chart that I drew up. To do SPX, I guess. No, I want to do a pair. I want to do a pair. Let's do a pair. So again, and so I want to walk you guys through that, and you guys tell me, what, and I want you guys to look at it, with fresh eyes, and just know that a lot of things will be similar, but there will be some things that are different. So I got GU or GBP USD, Britain pound, Great Britain pound, and US dollar, right? And so before I start there, though, there's one place that I do want to talk to you guys that I always go to. And if I'm trading pairs, I want you guys to really get yourselves familiar with this, or any type of currency strength meter. This is actually, I'll put the links in, but this is at livecharts.co.uk. And if you look here, and it's for that time period. So this will change. Like, I can refresh the screen and you see it changed. So you want to make sure before you're doing whatever, that this is good for scalping, just so you know. If you're scalping pairs, like say for instance, news happened and you're scalping pairs, this is a good place to go to see what's going on. So the ones that are high they're stronger, of course. The ones that are low are weaker. So for instance, CAD JPY, which CAD would be the base and the quote pair, and this would be the quote. If you were trading CAD JPY, you would know that I'm not even looking at the chart, but I can tell you right now that CAD JPY, you would be buying on it because CAD is stronger. Or GBP JPY is stronger, or odd JPY is stronger. So if I was to go to any of those, those three charts, I could see that if I go to GJ, do I have GJ over here? No, let me see. Let me do GJ. You can see it's buying. You can, I'm on the daily. I'm on a 15-minute. Yeah. Okay. Yeah. You can see it's been buying. It's buying right now. And so that's a good way to even, like, if you're not studying this pair, but you want to do a quick scalp, you can always go to the currency strength meter, and they got this ton of ads, but you can go to the currency strength meter and you'll see. So that was GJ. If I go to odd, and the higher it is, the better it is. So why trade these other pairs? I would trade CAD JPY or odd JPY if those are two pairs that you want, especially if there's news on any of those. So I'm gonna go to odd JPY and just show you that that's gonna be buying too. And look, you got these big buying candles. It's buying. So currency strength meter, that's what that's good for. The other thing I wanted to take you guys to, and it's not for that, is mataf.net. And the reason I wanted to take you guys there is because they have a lot of tools. And I took you guys there before to look at the Forex volatility when we were trying to do ATR. I took you there to look at the ATR. But one of the other things that it's really good for is the calendar. I like their calendar better than Forex Factory. And the reason being is, especially if you get to start trading pairs, like, and say, for instance, you want to know, like, when, I want to trade GBP when it has news, or, the major Forex pairs, or I want to trade JPY when it has news. this calendar will tell you, and it's based on your time zone, because it'll be based on your time zone. But it'll tell you on your time zone. Green means you can trade with no problem. It's like go. Yellow means trade, but be careful because there's news during that time. And red means to stop before you trade because this is a significant event. So it's just like that. So green means, yeah, it ain't gonna have any impact. Yellow is like, watch it. It's gonna, has some volatility, and red has a lot. So, but if you click on it, it tells you what it is, if it's S&P, what it is, whatever it is. And then you can also copy it to your calendar. So whatever calendar is set up, once you copy it to your calendar, of course, you know that you can set alerts. So it'll make you aware that is there. And so as you do your trading plan for the week, because I usually do a trading plan on Sunday to see, just like I schedule all the other stuff, I schedule my trading because it's a business, right? So you can also schedule the time, I want to trade GBP pairs this week because there's a lot of GBP news. Or I want to trade odd pairs because they're, whatever, it's a lot of red folders for odd. So that'll, of course, change weekly. You can do a monthly, and then you can also do it just based on the agenda, because then this way you can just see the red. You don't have to see it in, the format that, and just go through there. And I want and look and say, okay, tomorrow is not really nothing going on, but I'm way too far. What's tomorrow? Tomorrow it's some CAD and AUD news that's red that I could benefit off of. So maybe I'll trade some CAD pairs tomorrow. Wednesday, it's not any trading on Wednesday. I can't make any money on Wednesday. Maybe I'll plan to do something, to do some self-care that day because there's nothing really going on. So you can look at it from that standpoint as well. And that's why when I tell you guys I don't trade every day, these are some of the reasons. And maybe you have a setup on that day. It's good to get in after market returns to structure on a setup, especially if you had a setup, a position. So yeah, so those are two tools that I want you guys to be familiar with, that they're there. They're a good resource to use. And so yeah, so use them. Anybody have any questions on those before I kind of start? Okay, no. Also, you guys know that you can put these little things here is telling me that there's, it's a red folder for this pair. They come up only on the pair that they affected. So this is telling you at this time, so September 24th at 21:30 hours, that this is red folder is going to hit on this pair, and it'll have the flag of the people. So that's Australia. This is Japan. So this is Japanese news, and this is Australian news. So you can also put those on your calendar. On your Forex chart by going to settings and clicking economic events. So I wanted you guys to know that. All right, so I was going to do GJ because this one doesn't move good, doesn't move too much. Didn't I see GJ? Oh no, I did GBP USD. Oh, but it's ranging. Let's see what GJ doing. I wanted to do a pair because I just wanted to show you guys the setups, right? So nobody had any questions, right? I'm screen sharing. Okay, good. All right. So what I generally do is, of course, I start all the way from the weekly, and let me take these events off because they're nerve-wracking right now. All right. So I start all the way from the weekly, and these are old. Let me remove all my drawings. All right. So, and I don't need this either. All right. So I start from the weekly, and you can even go as far as the monthly, but I can pretty much, the only thing I'm looking for the monthly is, is there a double top or double bottom that was activated? And you can see that pretty quickly. If you're not sure, I don't usually do the box. I usually go in with the line. Like I'll go in, sorry about that. I'll go in with the line and put the line at the body between these two of the lowest candle, and I'll see, did it wick? In this particular case, it did not wick, so it did not activate this double bottom. So I have nothing to look at. We already know that pretty much everything is bullish, you know, from this time space. Oh, but this, yeah, this one isn't. This one just broke through there. Okay. So this would be kind of ranging, basically. So we see that's there, and we can see another important spot here was right here. It broke through this potential double top. And there's a lot on here that I see. Okay, so this is what I call a buy zone or demand zone. People, you know, this is a demand zone. It broke here, came back, retested, came back, and it broke this demand zone over here. So you can see that even though it broke it, it came back down, and now it's retesting it again. So that's kind of crucial. That's going to be a good trade when it decides what it's going to do. Just so you guys know, GJ is going to do something nice. Because it's going to take a big candle to break through. That's why I'm telling you that. And it had major rejection down here. It did not activate this double top. So it's going to have to burst through. So it's going to be buying for some time if it breaks through here. All right. So that's on the monthly. So now we go down to the weekly and we're looking for the same thing. Do we see anything? Right here, we have a potential double top right here, right? We'll know, you know, it's got 3 days left on it before this candle closes to see if it truly rejected or it broke above, which is this level it needs to break above, which we know is the same on the monthly. Then I go down to the daily and see what I see here. And same thing, you kind of in the same thing. These are the bigger time frames. But again, I'm going to look and see, did it wick this? And you can see it did not. It did not wick this potential double bottom down here. And so it's moving back up. So just looking, and I'm looking to the left, and I see, of course, this is a demand zone. Look at it broke through at this point, came back, broke through again. So this is a real important area, which is probably why it didn't even get close this time before it was rejected off of this area. So knowing that, that's on the daily, we have very confidence that this should continue to buy. If this was something that we traded, we going on the higher time frames, we know that it's trying to buy, right? Now, you also want to go on this because we don't have any type of pattern. We don't have a double top, anything like that. You want to look at it and say, what else can I point out as potential areas of resistance? And this is without the tool. You can come right here and see that this is going to definitely be an area of resistance because it's a potential to make a double top here. You also can see this. And what I tell you, them single candles are always, something to watch out for. And then of course you have this one and this one, but I'm not going to mark all of them because this is close to both of these. So yeah, I don't need to mark all of those. So yeah, so that's what you're going to do too. You're going to look at that. Then you're going to go down to the 4 hour. And you kind of look for the same thing. You're looking through the charts to see right now where your setups would be at. And you already kind of know. And you basically go in and you set your alerts. So since I don't have a double top or double bottom to go off of, I have a potential one coming up here. That would be a double top, which would mean it would go back down. But we have every confidence that it's going to continue to go up. So we're really looking for buys, right? So you know that here's that single candle. Here's another, we're just making it closer because of the lower time frame. You see more detail. So we believe that this is going to break forward out of this. So I would set an alarm. This is a potential position here, right? This is a potential position. Also, we can put a fib on this. And we do the whole move because this is the swing high to swing low. this move means this wasn't a retracement. This was it going back to the 50% and rejecting and now going back again because it's not ready to continue. It came down, it went to 50%. It could not break the 11.4. So it's when it does this, it's going to go past the 50.61.8, even as much as to the 786 before it'll probably reject again and try to continue. So that just gave me even more confidence that it's going to buy because it rejected the 11.4. Generally, when it comes, if it's done retracing, it'll test at the 38, it'll test at the 23, it'll test at the 11.4, and then it'll continue down, right? In this case, it tested the 11.4, kinda. It was not able to break through. It broke back up past the 23 and past the 38. So now it's heading to the 50.61.8. Oops. And if that's where it went to before, it's probably went back, got some muscle, and is going to come back and break through this time because it wasn't able to break through before. It's probably going to break through and continue, probably even continue up even higher. So these lines that represented places on the daily and the weekly they seem to be in confluence with what we see on the 4-hour time frame. So for me, if I was looking at this, I would look at putting in a position, actually once it closed past the 38, you were cool to put in a position, but because of this double top potential right here, I would wait till it closed above here. And this is the position I would put in. So I would put in a pending order, and then I would break this down into 3 TPs because this is a lot. So this right here on the 4-hour is a lot of pips going all the way to the 168. That's a lot of pips. So and I could put, and let's put a long position on it. So let's just say we waited till it closed. And I'm gonna put it right below this low. But I'm saying this, of course, it's gonna be better than this because I'm gonna get in on the lower time frame. So this is not my entry. This is once it closed above here on the 4-hour, then I'm gonna go down to the lower time frame and look for the actual entry. So my stop loss is gonna be much closer, trust me, right? So just looking at that, that's 400 pips, right? That's 400 pips. That's a lot of pips, right? And just imagine if you did, let me see, let me change the account information. So, oh, they don't have, I can't, oh, yes, I can. I don't want to do it off of JPY. So, because I don't want to do all the translations, but, oh yeah, I got to change it over. Just know that's a lot of money. Put it that way. I'm gonna make it easy. That's a lot of money. It's 85,000 yen. So you have to convert the yen to dollars, basically, because it's in yen right now. So again, and this is a position that you would not have to watch. And now what I would do is I would break it up in 3s based on this right here, or not even 3s. I would base it up. This would be 1 TP. And then this would probably be my second TP. I wouldn't even end it here. And I would put trailing stops on them and give it some room to breathe based on the ATR. That's it. And I wouldn't watch it. It would close on its own. I would be done. And that's what I'm saying. So even though I'm teaching you guys scalping, I'm teaching it because the reason I'm teaching you guys scalping is because you guys can see the effect of it in the same session. You would never be able to see the effect of this position in the same day, possibly not even week. So you take that same, this same thing, this same concept, and you take it down to the 1-hour, and you might be able to, you'll see intraday trades. But for me, what I do when I go to the lower time frame is I look for different potential TPs. And as you can see, this is why I know it's going up. you can see it's clear, like if this is my entry right here, right? I'm entering after this candle, this blue resistance, right? I'm entering after I pass that. And then there's no resistance until my next TP. And then there's no resistance until what I said my next TP was. And this is I was on the 4, and now I'm going to the 1 hour saying that. So now you take it even further if you wanted to, but again, I don't really go, 15 is scalping to me. So I don't like to go past the 4 hour, but this is on the 1 hour. So these are like clear skies for me. That's how I look at it. So, you don't have to, these are trades you wouldn't have to watch. You wouldn't have to do anything. So this is, trading the pairs, and just know that think of it this way. It's like $191 to trade this versus 20,000 to trade NAS and 40,000 to trade the Dow or US 30, or 5,000. What is it? S&P is at 4,000 right now. No, what is S&P at? Yeah, 5,000, almost 6,000. So what I'm saying is the leverage required to trade the pairs is not as bad. And so you can make just as much money. Okay. So how I set a tight stop loss is, Nina asks, how do I set a tight stop loss? So say for instance, this is my entry right here. So I'm entering, I'm entering after this, after it clears this is where I'm entering, right? So I already know the 4 hour has cleared this. Just say the 4 hour has cleared this, right? So I know that the analysis is good, like it's gonna go up, right? So, and I'm just gonna put it down here. I know it's up here, but I'm gonna put it down here, you guys, so that you can see what I see when I do this. So say this is where I'm getting in, right? I'm getting in, right? It finally closed above it, I'm getting in. And then I'm on the, I know that was a 4 hour trade. I'm going to go look at the 15-minute. Did it show up? What happened? Oh. Oh, I'm like, where did it go? All right. All right. So now let's go to the 15-minute. I'm going to go to the 50. I'm going all the way down. I'm just saying the 15-minute for now. The dog decided to bark at somebody. So I'm going to start at the 15-minute, right? And I'm going to start looking for my entry. So just say it closed above, and now I'm looking for my entry. So it's closed above, but now it's going down, right? It's going back down. So 15-minute right now, this just allowed me, my stop loss was below here because on the 4 hour, I'm below, think of it like this. Oh no, I was on the 1 hour when I put my position in. All right. So my stop loss was below this low, right? So this is my stop loss according to the 1 hour, right? Now I'm going down to the 15-minute. I can move my stop loss up a little bit, actually, to here, because this is now the low of the 15-minute, right? I can move my stop loss up to here. I'm not going to go no further than the 15-minute for my stop loss unless I'm scalping, not on a position trade. I'm not. But so basically the way you're able to get your stop loss lower is your entry is good. You closed above wherever you needed to close. Your entry is fine. Your entry is good. Just say this candle closed. We know it ain't closed, but say this was the trigger point, a closed candle above here. So your close is good. But your stop loss, because we're going off the last low, this is the last low. And some people would even say this as it being the swing low, right? That's how some people would tell you, go off the swing low, whatever. I'm telling you, I go off the last low because my confirmation of the trade, I go through so many confluences that I know my entry is bomb. So I'm not, so that gives me, like, I know that if it breaks this low, then I don't have my points anymore on the higher time frame. So I know that it ain't gonna be on the lower time frame. So I already know that. So my entry is so tight, it's my entry that I make sure is a good entry, so that when I go to my stop loss, I'm not even tripping, because I know that my entry is so good. Like, I could even, to be honest with you, I could even go as far as to come here and say this is my stop loss, depending on what my entry analysis was. So I would probably, yeah, because just, I'm going off the fact that all of these things are confluent, right? So my entry is on point, because what happens is, if I drop below whatever low that I come behind on the higher time frame, I know that it wasn't ready. It doesn't mean that it was wrong. It wasn't necessarily ready. So just imagine if this is your stop loss on your stop loss, because your entry is so on point that this is your stop loss, right? So I'm on the 1 hour. Now, when I go down to the 15-minute to well, it's kind of the same. Look even closer, because I'm not going no further than the 15-minute. I'm below this area, so that I'm in a good position. And so if you go to risk to reward wise, right now, that is a 1 to 8.
1 to 8.
Yeah. And that's on a 4 hour, a 1 to 8 on a 4 hour. That's a lot on a 4 hour, right? To get a tight stop like that. Cause when I was getting like the 1 to 30s, that's because I was scalping. I was doing a calculated scalp. I was looking below the 15-minute all the way down to the seconds, to sometime I would go down to the 5-second. So when you're, and that is a position trade, you can still do it on the 15-minute, but I call that a scalp. When I call it a scalp, I'm calling it a scalp because not because I'm getting in and getting out. It's not that type of scalp. I guess it's a position trade, but I'm not going below the 15-minute for my analysis. So I'm doing a 15-minute analysis. So to me, anything 15-minute or lower is a scalp. It's not even intraday. To me, intraday starts at the 1 hour, the 1 to 4 hours. That's why. So I call it a scalp, but it's not a scalp that I'm actually literally scalping. It's just in terms of the time frame that you're doing your analysis on. Because if you're looking at the 15-minute, like, I'm not looking at all of this stuff back here. I'm only looking at the last swing high to low. Which only because this is a double top, I will be looking at this one. Well, no, it's not a double top. So I really would be looking at this one. Yep, I would be looking at this. And that's it. I would do all the same stuff, so to speak, but I'm not looking way back there. I'm only looking at this. So none of that would matter. I would only be looking, well, maybe this. I would only be looking at this for the 15-minute. And I'm like, okay, it came to the 50%. It's just coming off the 23. It got rejected. It rejected the 11.4. Let's see, is it going to come back down and continue the down, continue to go down, or is it going to continue? Is it going to go up? And then I'm gonna look over here for them 1 candle resistances, which it's a lot. So really that starts right about here, which is where it's at. That one, because look at all these candles that were white before we got resistance. So this is the next. So if I was looking, I would like, this would be an area of resistance, but these are so close. I would just look at this as a whole box because they're so close. So I know until I break out of here, like my entry would be out of here. But because I have this double top pretty much right there that it would create, I wouldn't do a trade until it broke above that necessarily. If I'm going on the 15-minute, because I'm not looking at all of this data back here, because in 15 minutes, it can go up, down, up, down, up, down, 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 up, and still be on target for the 4 hour. You can go through all of that stuff and still, it can go down, 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 up, 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 down, down, up, and still be going up in order to catch this up trade that's on the 4 hour. So that's why I call it a scout. So it's not a position trade that, like, that's one that would close. I would open and close the same day. It would hit its TP on the same. I would expect it to hit its TP on the same day. Because remember, my confluences for my entry are going to be way tighter. So like, for instance, say I have to enter here. I'm just going to hide this one really quick. So say, for instance, based on what I see now, I say, okay, I'm not going to get in until it goes here, right? I'm not going to get in until it goes here. Now I'm going to look at this as being my TP, right? Because of this. Right, so that's going to be my TP. And because I'm getting in once it goes here. And then let's take this off. So then I'm gonna go all the way down. Shoot, I start at the 5 looking for lows. It ain't even made the low that I'm waiting for, because it's gonna probably come up, make another low, come up, come. You see what I'm saying? So the low would probably be way up here. It ain't even probably processed the low. So when you look at it from that standpoint, that's only a 1 to 5. And that's because I don't have any frame of reference to go by, but at this point. And just imagine if you take this low that you find when it finally breaks in, because remember, the lower you go, like right now, the higher it goes up is going to be making lows, right? So imagine you go all the way down to the 5 second. Once it comes up here, yo low, oops, go back here for a minute. Let's do 15 seconds. Okay. So just imagine as it continues, it got to get up here. It's going to continue making lows, right? And this is, so just imagine as you get down to the 15 second, if I go all the way to the 5 second, and I'm making, look at these lows. These higher lows. It's going to make some higher lows like all the way up here. So that's going to get you to where your stop loss is like this. Because you're entering here. Of course, you're only on the 15-minute is your analysis time frame. So you can enter like that because you have the confirmation on the 15-minute that that's where it's going. So it's got to make up a whole bunch of 5 seconds, and you might go into drawdown, but it's not going to be much, because by the time the 5 second has come up here, you got so many 1, 2, 3, 4s of confirmations of the uptrend that you're good. Because remember, you started this journey looking at it from the 15-minute. So by the time it got to that point and confirmed to the 5 second, that was it. The other reason I used to catch it is because I was catching reversals. I was catching it at the 23. So I was catching a reversal, just so you know, I was catching a reversal, say. So what I meant by that is, let me show you. I'm going to go back and show you what I mean. So I'm on the 15-minute, and I have to push this replay back. So I'm on the 15-minute, and just say this is a 15-minute. And I put my fib on. And this candle verified that it validated, because it passed the 23.6. It validated that it was retracing, right? So I knew that this was finna go up. It's at least going to the 50 or the 78.6. So that's number one. So let's just say this candle just closed. Now right? So now I'm finna get in. So let's get in. But oh no, I did it wrong. Okay, let me just show you this. So this was the 15-minute. Now I candle closed on the 15-minute. Now I'm about to go down to the 5 seconds, right? Now I'm about to go to the 5 second and find my entry. And this is what I'm trying to explain to you guys. When you got your confirmation on the 15-minute, it's not coming back down here. Remember, this is where it's at on the 15-minute. When you get to the 5 second, you don't see no candles coming back down here, way down here. Why? So I got this confirmation here on the 15-minute. So now I'm gonna wait for my 4 points. 1, 2, 3, 4, boom. I get in on the pullback. So now I'm getting in right here. This the pullback. When the 1, 2, 3, 4, this the pullback. I get in, right? And I'm going to the 5061.8, right? Which is here. My stop loss is right here. Because you know that's my violation. So I violate, I can't even see it, so tiny. Let me make it bigger. So yeah, so this is my entry. Because it's 1, 2, 3, 4, pull back. Yep, this is my entry right here. This next candle, that's my entry. This is my, right here, is my low. Because if it comes back down here, it violated that low. Because I'm on the 15-minute, right? I'm on the 15-minute. Just with that, right? So if I go and I know it's going at least to the 5061.8 zone, that's a 1 to 15, almost 1 to 16, right? And let's just go, go a little bit faster. Oh, I'm looking at the wrong place. So let's just go here. Yeah, I got to speed this up some more. These are seconds, y'all. All right. Oh, this is small. See what I mean? Even though it came down, these are seconds. Because your confirmation's on the 15-minute, and your entry is on the 5 second, your confirmation is on the 15-minute. So you have the higher time frame to make you secure that it's going there. Now it passed the 38. That could be your TP1. So it passed the 38, it's coming back to retest. Now it tested it, but let's see, you just got wicked out. That's why I make my TP1 the 38, my TP2 the 50 and 68, but it's still going back up. So it's coming back to test. Oops, I'm trying to get this. I was trying to make this go over. So, okay, so there's a second. So it's finishing. We're trying to see, is it finished testing? This is, you need your 4 points. 1, 2, 3, 4. Getting in a pullback. This is what I mean. You violate here. Why are you going to stay in? Once that, if this was my, so let me stop this. Okay. So this is what I mean when I say, once it violates, that's why my stop losses are so tight. So, okay, so it went to the 38, that's TP1. Okay, now I'm going to wait to see what it's doing. Come back. This is if I'm going off of fibs. So now this is, it finally came back, and it shouldn't have kicked you out. You should have got out in profit at the 38. I think this is I don't know which one is the 38. One of these blue lines is the 38. So either one of them, you should have got out in profit. So when it came back here, you shouldn't have been in the trade. So now it's playing around here or whatever. You trying to see, is it going to come back to the 11, or is it going to keep, is it retesting the 23 and it's going to go back up? So you're trying to see that. But what did I tell you? Even if you was in this trade, like, so say for instance, you said, oh, okay, it broke back above the 23. I'm going to get in when I get my 4 points, because you don't have your 4 points when it broke through. So you got 1, 2, 3, 4, right? 1, 2, 3, 4, right? So this would be your low. Just say this would be your low. Actually, I'm trying to, these candles so little. So I go double those, that's the same. So 1, 2, 3, 4 right here. So this is my low or this is my low, one of the two of these. But let's just say I made this my low. So that means my stop loss would have been right below this. I just got wicked out of my stop loss. My whole point is, is if I don't have to wait. These are so close, but I don't have to wait till it comes all the way down here to know. I'm knowing right here. I'm going to know. I already know. This keeps moving. I already know, even if you go here, like it went here, and then it came down here, it didn't violate, but it technically did because you had you're getting these lower highs. So once you start to get your violations, right, that already tells you that, so definitely, especially if it violates a low, that's why you can make your stop loss so close, because as you can see, why stay in, right? Why stay in when you can just get out with a small stop loss and just re-enter when it's ready? Because it doesn't mean it's wrong. It simply means it's not ready yet. It's not ready yet. And we've been taught to stay in and to endure this drawdown. And I don't understand why we got to endure the drawdown. Like, it doesn't make any sense. So yeah, we don't have to endure the drawdown. You just get out, take, the pennies that you lost, because it's pennies on the dollar, and just get it back, like when it's ready, and you're not violating whatever your low was. Yeah, see, it's still ranging. It's ranging. It's gonna go back up because it wasn't ready. Now it's ready. Because I bet you this 23 it was not able to come back down and break this 11.4. So it's going back up. But that's how you get you get your analysis on the higher time frame, but your entry is on a lower time frame. And I wouldn't go to the 5 second for a 4-hour entry. It don't have enough room to breathe that way. And so that's how I would get it. And it's gonna, of course, this is second, so it's got to play out. But then, you would get, that was like a 1 to 16 if I'm going to the 50-61-8. But sometimes, I would just trail it, and I would end up with like to the 7-6-8, and that's a 1 to 26. That's how I would get them, because I already knew if it continued here, it would end up, and then it broke out of here. I knew it was going to probably continue to the 7-6-8. And so that's how I would get those 1 to, like, my stop loss would be so tight because my entry was on one time frame, but my analysis was on one time frame, but my entry was a killer entry on a way lower time frame. But the confirmation came from the higher time frame. So I was okay with having such a tight stop loss, because I knew that if it went below there, because really, look, I mean, even if you look at this, if this was my stop loss from when I got it, just even here, if this was my stop loss, which is where I got the 15-minute confirmation, even if you made that your stop loss, I'm still at a 1 to 10, even if I made that. So and that's the higher time frame analysis that stop loss is based off of. And as long as you're getting, your confirmations, your 1, 2, 3, 4 count, whatever you want to call it, you're good to go. When it starts to violate, that's when like here, it violated this one, but you got, looking just, not going, this is 5 seconds, but just making this, like, making higher highs, higher high, higher high. It made a lower high, but that's only one. Now it came back and made evens. Now it went back, higher high, higher high. I mean, higher low, higher low, higher high, high. So it needs to violate it. That's why I wait for the 4 violations. Now it's in the 76.78.6. It might not be able to break this. It's violating. Look it. it's violating. It made it equal high. Let's see, is it going to come down and violate again? It violated. If it violates again, I'm out of there. Because I would have 1, 2, 3, 4, but it came back and it wiped that out. But look, wick, manipulation. That's a bot. That's not a body. That's a wick. Now look where it went straight to where the 786. That's what I'm trying to say. That's how I was able to catch him. So again, that count is for me is crucial, and it's still going because I'm doing, of course, this is the 786 on the is that off the 15? I think I don't even know what time frame I did that on. Oh, I did it off of this. I don't even know what move I did it off of, but yeah. So that's that. So hopefully that explained. This is where you guys could really, compound your account. This is where you could really compound your account. And as you can see, it end up going way over there. You take your profit, even if you take your profit and put it in your account and enter another position and continue from that. Because, I always say I would like my money in my pocket. So that's kind of how I do. That's why I have different targets. So I always take some money off the table. I don't just keep it in there. I used to, but that's how you get the type stops. And you can even look, if you're looking at the 15-minute, after you would have entered, you just got wicks. This is basing it off of the 15-minute, the last candle, when after you entered. But you're not, when you get that confidence off of here, and then you go to the lower time frame from your entry, you good, you golden on that. So, but this is something I know is exciting to do, the scalping and everything, and we can look and see if it's something for the last half an hour. We can go and look at something. But I just wanted you guys to really get this and see that I make quicker money scalping, but I make easier money position trading. So, yeah, that's why I say this is really, really good. All right. So what are we going to scalp tonight? What do you guys want to scalp tonight? Let's look at, and you said something about that. Hello, can you hear me?
Yeah. I do have a quick question. When you're trailing, are you trailing from structure or are you trailing from a pip count?
You can, the trade manager does both. You actually can do, I haven't back tested it yet, but you can do ATR or last low or last high. That's what it will be in the end. You can do last low, last high, or ATR. You'll have, or a set number. So you'll be able to trail by a set number, or ATR, or last high, last low, which is structure. Because remember, when I trail, I'm not trailing. I'm not doing it. The trade manager is.
So another question. One more quick question. When you okay, let's say you entering on a 4-hour end or the higher time frame for your long position trade. Do you go to the smaller trades after that trade is set? Because you now know the set bias, you know the set move, or do you sort of do it during and after? But that's basically my question. Do you wait? And then once you're in the higher time frame trade, now you can eat everything underneath that because you already know which way it's going.
So remember I said, and so it's a little bit of both. So what I do, so say for instance, I got this trade on the daily. I caught a trade on the daily. Well, the daily moves a lot, so my stop loss, not my stop loss. My take profits are going to be far, right?
I get that.
As far as pippage, like 700 pips, 1,000 pips, or whatever. So my take profits are going to be bigger on the daily. So for that reason, I have smaller lot size. So say for instance, I'm just doing a 0.1 lot size on the daily trade, right? or
Mhm.
0.01. I'm doing a 0.01, say for instance. Now,
Mhm.
again, remember that same setup is also because they're only fractal waves, the lower time frames.
Mhm.
So say for instance, I got in on the daily, right? Now remember, so now I got in on the daily. So I got the first trade in on the daily. But on the 4 hour or the 1 hour, or, because remember, I don't really like to go below the 4 hour when I'm position trading, because I don't want to keep worry about it. I want to go to sleep. So
Okay.
I won't go below the 4, or sometimes I'll do the 1 or 2 hour. So I'm going to go, remember how I showed you that I go down to the lower time frames and I look for those areas of resistance and mark them.
Mhm.
So
Yeah.
like, say for instance, say I was in a trade and this was an area of resistance right here, right? So I know that this area of resistance that's going to give my trade trouble, it may cause me to go into
Go back.
back, right? Remember I
Mhm.
told you about those reversals, right? I catch reversals early, right?
Got it.
So if this is the 4 hour and this is the position that I feel like I'm gonna get, I was going up, I was in a buy, and I know that I'm possibly gonna get a sell here. So I'm gonna go back down, I'm gonna go say down to the 1 hour, and I'm gonna look for that area, right?
Mhm.
And I'm gonna look and see, because remember, all this ain't gonna be here. We'll just say this ain't here yet. So this is the area where where I could possibly, this is a candle, right? So this is the area where I could possibly, because that was the candle I saw on the higher time frame. So I know that could give me some trouble, right? This is backwards because I was going, let's just say, okay, say I was going down, and then the areas give me trouble to go up. Let's just say it like that, right? So now I'm here, I'm on the 1 hour, right? So now I'm gonna go down to, so the 1 hour, okay, I'm gonna go down to the 15-minute, and I'm gonna start to see, oh, I'm possibly moving up. That's when, you know how you say you do them fractal, you fib those fractals. That's when I would fib a fractal, because I'm only looking for this move, because I'm trying to take a small move within the wave. I'm trying to get the reversal. I'm trying to capture the reversal of that small move, because I know it's going up. So I'm trying to catch the reversal of in between the move. So that's the reason why I'll do a fractal, because I'm not trying to catch the whole move. I'm only trying to catch a piece of the move. So I'm trying to catch the last piece of the move, because I saw that I was going to have trouble around here anyway. So if I'm going to have trouble and I was in a sell, then I'm going to be buying. So now I'm going to fib this, right? Fib the last place. And now I'm going to try to catch this, and I'm going to try to catch this short trade. Oh, it just closed above the 23.6. Remember, I don't do my analysis less than the 15-minute. So now this is my candle. Okay, 15-minute, it closed above it. Now I'm looking for an entry, because I can see it already closed above the 23.6. Let me go find an entry. Let me go to the 1 minute. Let's see what the 1 minute is doing. Okay, do I got my 4 points after this? 1, 2, 3. I'm about to get my 4th point here. Let's see. Oh, it's 10 times. Let's go to 1 time. Okay, it broke below that. So that's not really my point, right? So let me keep, because it didn't give me my points. Wait a minute, I start 1, 2, 3, 4. I got in here, it retested. Actually, I did. I got it here. No, because that's behind. I'm sorry. This is it. So this was it. I'm sorry. 1, 2, 3. Yeah, this was 4. But that's kind of wishy-washy, because it's kind of even. So I'm gonna wait. I'm gonna wait and see, is it gonna make a higher high? It made a higher high. What is it doing? So you gotta eat. So every time I get it pretty much equal low, I'm not getting in yet, because I want to make sure that it's going higher, because I am at a lower time frame, right? So, and I want to make sure that I'm not getting in wrong. Now it just violated and created a lower high. I'm not getting in. So this is where you going down to the lower time frame and you trying to find that entry, right? I know it's supposed to be, I forgot, was I going up or down? it's going down because I'm trying to go up, right? So now it finally broke. I already had my 4 points. These were equal, right? So it broke this area, which is the 38.2. Now I'm finna look for my entry, but now, oh, oops, I did something wrong. Now I'm finna look for my entry, but now I'm finna go to even, and I messed up. Let me go back some. I think that was it. Let me see. So this is where, let's see. Oh yeah, that's where it broke. Okay, so that's where I was supposed to be at, yeah. So now it finally broke. It broke, right? So it broke above this. I already got my 4 points. I got my break. I'm at the 38.2. I know it's only gonna go to the 5061.8 possibly, because that's a normal retracement. So now I'm looking for my entry. After this candle come, I'm looking to see, is it gonna retest or is it gonna keep going up? Either way, after this next candle, I'm gonna know what I'm gonna do. It retested. So I know it retested. It didn't drop below. I'm getting in. So this is my entry. Oh, why am I doing it? But it's of course at the next candle, but that's my entry. Excuse me. This is my entry, right? This is my entry and this is my exit. That's my exit. And this is my stop loss. So even on this 15-minute, that's my trade, a 1 to 6. And that's because I'm on the 1 minute. If you would have went lower, you would have got a better, of course, because you had a lower stop loss. But again, so, oh, go ahead. This is also the first General Assembly since the October 7th attacks. And some people make it stop loss to 50. Some people make it to 61.8. Some people put it in the middle. It's just up to you and how you trade. Because, yeah. So if it would have been the 50, it would have hit. If it would have been the middle, it would have hit. I don't know if it's going to hit the 61.8. So now, it just kicked me out, right? If I would have waited for the 61.8. So again, of course it wouldn't have kicked me out because I would have had to trail and stop. But you get the gist of what I'm saying.
I get you saying.
So that's how you go in. So, and now mind you, I'm in a buy on the other, and then it hit right there anyway. So, and I'm in a buy on the other one. I forgot what I was in. I forgot what I was on the higher. I was in a sell. I was in a sell because at this point we were selling. So I'm in a sell on the other one, on the other trade, right? But we expect that one to go up and down, right? But this is me just capitalizing on this middle one and of this pullback to get, I'm getting it right. And you can go as low as you want. Me, I like my analysis no lower than the 15. A lot of people go to the 5 to the 1 minute because you just that's why I call it a scalp. Even though it's analyzed and it's a calculated scalp, it's still a scalp. It's not anything that you're supposed to be in for a long time. But see, for me, because I stopped watching the charts, right? I don't watch charts anymore unless I'm scalping, literally scalping like seconds. I don't watch the charts. So if I get in this trade like this, I wanted to watch itself. So I wanted to know that it's going to do what it's meant to do. And so, and that's why I say some people just make it to 50 as soon as it hit the 50. That's where they would have been. And that's 130 pips. Is it? Yeah, 130 pips. I'm sorry, I'm in a pair. So that's 130 pips, which is good, especially because remember, when you're doing these smaller ones, you're gonna have a bigger lot size because your risk size, your risk is so much lower. So what would like, say for instance, if your risk amount is $500 on a position trade, $500 on a daily, and breaking that up as far as pippage, you have to go much smaller in your lot size versus $500 being your risk amount on a 15-minute. You can go bigger because $500, like this is how many pips of a loss? Like 11. What is it? 3. 468. 430 to, yeah, that's what I write, 39, 3.39. So that's what I'm saying. Your stop is nothing. So just imagine dividing that by $500. You can go to a much bigger lot size there, if that was your number. And see, what people do, to where I feel like they do it wrong, is they'll have a smaller number for the shorter term, and like they may say, I'm gonna give $500 for my daily when I catch a position on the daily, but I'm only gonna give $100. I want to do the risk of $100 when I'm on the 15-minute. That makes no sense to me.
It makes no sense, yeah.
It should be the same. Whatever your risk amount is, I'm willing to risk $500. It doesn't matter what time frame you're on. You should still take that same $500. But now just imagine what your reward is going to be, because your lot size is so much bigger. And if you get scared, you can get out a lot quicker and still make the same amount of money if you happen to be watching it and get scared, because your lot size was bigger, so you made your money faster.
Yeah.
So,
I'm with you.
got it? Did I answer your question?
Yeah, you answered my question.
Okay, all right.
Let me see, yeah.
And then the other thing that Nana asked about, where I have virtually no drawdown, is it because of hedging? No, hedging, remember, is to protect. The purpose of hedging, the way I was given it, and I know they hedge for risk. The world's way of hedging, or the normal way of hedging, is based on risk management, and they're protecting the margin. So you don't get margin called. Excuse me. So that's how, they teach it. And I don't know the full way of how they teach it, because they teach it to be in a correlated pair. Like, you're supposed to be in a pair that correlates with the pair you're trading. Like, I use the correlation calculator to see which ones correlate. Like, I don't know them by heart. But that I was given it because it does the same thing. Yeah, of course it protects your margin, but it's the psychology part. Because, like, for instance, the first thing when you guys saw me hedge, the first thing that you were able to say was like, oh my gosh, you had so much more confidence to trade because you had a backup plan, basically. And that's the purpose of it. That is the purpose of it, is to allow you to be able to step away from whatever you're trading at that time and not be intimidated by the drawdown, to give you time to think it through or wait it out or whatever, without continuing to bleed. Because a lot of times, and you can even use the hedges, it's starting to go against you. You're not sure, should you get out or should you stay in or whatever. You're just not sure right now because you're panicked. Throw a hedge in there and wait. And then don't try to figure it out then. Go away from the charts for a while, eat some dinner, I don't know. And then come back when you're in a more calm space. That's the purpose of the hedge. It's the psychology part, more so than anything else. All right, we said we were gonna look for something to trade. Let me see. I'm gonna go to see what NAS and them are doing. What is this, the 1 minute? Oh, they went up and then dropped. Let's see. S&P. Oh, they all kind of doing the same thing. Oh, wait a minute. Because you're still in replay. Let's see. Oh no, it's still doing the same thing. Okay, let me see something. All right.
You want S&P? Yeah.
Yeah. Is anything, nothing's really moving. Is anything moving pretty good? This is S&P right here.
I didn't see nothing really move well.
And nothing, it's Monday, some days, and that's the thing, make Monday your study day. If it's not, if nothing's, you don't want to force a trade. Again, it ain't, because you're just gonna get yourself stuck in some mess. It's Monday. Monday is a slow day. Yeah, so even it's slower in the daytime, even slower at night. Did anybody catch any pips today? Because I don't see nothing. Oh, let's try Bitcoin. Let's see what Bitcoin is. Aha. No. Bitcoin is always doing something. Man.
What is Bitcoin on trade on Tradeovate?
Oh, Bitcoin is on Tradeovate. Let me see. Yes.
Okay, let's get there.
Let's see.
What is it?
Oh, definitely. Yep. Let me find it. Does anybody is Alicia or there we go.
Bit you
But
for?
you have to trade for Apex, you have to trade the micro, I believe. It's the Z.
Bit V4?
V4, I think it's V. Let me see. No, it's this one. It's the Z. The Z.
BTC Z4. Hold on.
But I think you have to trade the mini, the micro or something on here. I think it's the micro. I don't think you can trade. Let me not be in this. Yeah. Let me, keep that on a 1 and let me only trade one account instead of all of them.
So BTC. Z4.
Let me see really quick. I just want to I'm just going to put in one trade really quickly to see if you, let me take these candles. And you get these little dots be like this because it's like stand still, but it's not really doing anything. Let me see. Can I trade? Let me just, because it moves so fast. And you see like the values there. Let me see.
I'm on the 15-minute.
Huh?
Time frame are you on?
I'm on the 15. Oh, I'm on the 15. Thank you. I'm like, it ain't even. Okay, there we go. Let me go to the 30 seconds. Thank you, Nina. Nina, know this Nina's stuff. Take this off. Put on the RSI so I just was gonna do one just to see. I've never traded Bitcoin in here, but I know you can. Okay, so it looks like it's coming up. It's been going, man, this where we should have got in. Let's see what a buy looks like. Is it gonna, oh, I still have this on. See, what's the quick buy?
I tried the ATM today, and that is phenomenal.
I told you guys.
Phenomenal.
Tell us about your experience. I think you got to do the micro. I got to find them. Oh, put M in front of it. MB. There you go. It's M. You got to do micro on here. Micro Bitcoin. There you go. But tell us about your experience. Oh, I want to hear. Like, oh my gosh.
Well, I set up 3 templates, one for 150, 300, and then 500. And so, I don't know, it was just because too, I was looking at when I was doing it manually, like I would hit my number, but it would go so fast that I would miss it. And then we'll go into drawdown. So I put that ATM on there, and it was like as soon as I got in there, it was just like order filled, order filled. I was in, I would get out, and I was so it ended up being disastrous because I blew my account, but it was fun. Not supposed to be fun. But I just felt invincible. I was just like, yeah, I'm gonna pass today, and then yeah.
How did you blow your account? I thought you would.
Yeah.
It wasn't
what
from
happened?
that. It was from something else. Was it from the ATMs?
It wasn't from the AT. Wait. Okay, so this is so I had when I first started, my drawdown was kind of low, and I got
That's
it built up to um almost to the it was like originally an 800, and I got it built up to like 16 or something like that.
okay.
And then I kept going in. Um
You gotta.
yeah. And
Okay.
then I started getting even eager, and so I was like, well, let me do a 500 with
Okay.
a
Yeah,
my,
no, when you're low
my
like
contract
that, you just do a
size.
hundred. I know you don't want to just do your
Yeah.
100, just do your 100. And yeah. Oh,
Yeah.
okay. But the ATM was, I knew, I haven't gotten a chance to try it, but I just could tell like that the ATM, because I know that we don't have the trigger finger, but the machine does.
It
Yeah.
was like literally an ATM. Like I get in, like I was hitting really, really fast. Yeah.
Okay.
Yep. Yep.
Oh, you got some tips today, Ruth? Tell us about your victory. Can you talk? Maybe not. Okay. Okay, well, that's good. I'm glad you got some pips in, but yeah, I really want to try that ATM feature because I know like when we're not able to get them on our own. But see, and this is the other thing I want you guys to pay attention to. Look at the bid and the ask price, right? You see the difference? It's like 110 pips. Like, you see that?
Yeah.
Between bid and ask. Never trade Bitcoin at night. I'm gonna just tell you guys that. Pay attention to that because that means you're that much in a drawdown when you first start.
That's right.
You know what I'm saying? So y'all want to pay attention to the bid and ask price, especially in these high ticket things, these high ones. But yeah, you have to trade. I'm not playing with this account on it, but I don't have a demo in here. So, but I wanted to see like, but you can trade it, but you have to trade the micro. I do know that you have to trade the micro, but yeah, so, but that's your, over 100 points is your, I call it, I know it's bid versus ask. They commission their money. They making that off the top when you first enter. So you want to be
Yeah.
aware of that as well. So that's why you come in negative. But I want to, yeah, maybe that's what we'll try to do tomorrow. Try to do some ATM trading, and try it out. But I knew when I started working with it, I'm like, oh, this is the answer right here. But this is the thing that I can't do. I can't move this fast, but it can. So yeah. And what we're talking about is this. I'm gonna take this off a trade really quick. Oh, I gotta keep it. I'm tripping. I gotta have it on trade mode to show you. But what we're talking about is this, the automatic trade manager feature. You can turn this on. You can set a setting based on dollars, based on ticks, or even based on delta price. Delta price is basically how it performs in the regular market. Like in here, it goes by ticks like 0.25, 0.50, whatever. But like say if we were on NAS, it goes by 0.25, 0.5. Those are ticks, but it would go regularly by points, just 1, 2, 3, when you put in delta price. That's what delta price is. So ticks, delta price, or a dollar value. And so you can tell it, I want my stop to be based on a certain take profit amount, $100. I want my stop loss based on $20, like a certain dollar amount. You can actually put that in and it will manage that trade for you. And so where we're not able to click really fast or we get a little greedy and hold when we shouldn't hold, it'll take that out of it. And so again, as much as we can take that psychology, that human part out of it and you only can do it to a certain extent because of course you want to still do your own analysis, but as much as possible when it comes to taking your money, especially on scalping, these ATMs I could see would work really well on scalping because it won't hold, it's gonna kick you out. So if you set this for 200 or 500 or whatever, it's going to kick you out at that value. So you don't have to worry about, dang, I should have clicked the button. It's going to click it for you. So really want to try and utilize that tool. And I would recommend that you do it if you're scalping on take profit only, So you can, because if not, it'll probably kick you out, you know, a lot in stop loss if until you get the right settings. So I would do it on TP only and just do it like a smaller amount, like say for not, I wouldn't do like our full $1,000 that we try to get for the night. Do it in smaller bits, and then that way you could do multiples because it's smaller and you don't have to wait. In this case, with this being in there, like say you have it at 250, you don't have to wait for, you have, the first time you have to wait for the 4 points, but after that, every time it pull back and go back in, you can go back in. So really, really neat tool. Only thing, and just know that you can't use it with groups. So you can only use it with single accounts.
Okay.
Yeah, so it's a really good tool to try. I wouldn't try it if you got a demo account with them. I would try it in the demo account just until you get used to it. But I'm gonna try it in my Apex. But I'm gonna try it in something because Apex, I forgot I do groups. So, but yeah. Well, it is almost 7:30 and my voice is starting to act up again. I can feel it. I can hear it and feel it. So,
One more last question. When are we gonna have this tape? Right here.
I'm gonna try to get, I am so tired. I'm really gonna try to get all the tapes. If I can't get them done tonight, I'm gonna try to, because I have to, because I only can record for so long. It's only gonna store so much. So I'm gonna try and get them done tonight. If not, definitely in the morning.
I just want to know when you said in this one. I want this one.
Okay, you want this one? Okay,
This
just
one.
remember the date, because this date is by
What's
date.
today's
So
date? What's today's date?
the
Today's
23rd.
23rd. I want September 23rd tape.
Okay, all right. So I'll make
All
sure.
right.
So I'm, of course, when we end, it'll start rendering, and then and usually that's what happens, because you know I get up at 3 o'clock in the morning. So by the time I leave out of class, I'm eating a little bit, taking a bath, and
out.
going to bed. So I don't even come back downstairs to look and see if it's rendered, and then I start my day and I forget. So, but I'll try to do it. If not, remind me. I'm gonna try to do it. I'll try to
Definitely
do
will.
it. I know, because I have several that I have to do the last weeks too. So I have
Okay.
several that.
So this one and another one you did on market structure.
Okay.
That's it. I'll get them. I'll find them.
Yeah. Oh, you'll get them. You'll get them. That's for sure. You'll get them.
All right.
All right. Well, if that's it, nobody else has any questions, I'm going to retire.
Thank you so much.
You're
Thank you.
welcome. You're welcome. Thank you guys. So I will
Bye-bye.
see you guys later, or tomorrow, and you guys have a good night.
Yeah, good night, everybody.
All right. Good night.
All right.